Welcome traders to yet another educational video of Nifty Short Term View, episode number 45. In my previous video of episode number 44, which I made a couple of days back, I had clearly shared that the state of trend is certainly down. And we also saw that it was a gap down on that particular day of 13 June. And I had also shared that there could be a possibility that a little bit of consolidation is possible for next couple of days. And after that, if the momentum continues, I think the first level which could be tested was supposed to be 15,450, and you can clearly see that Nifty has gone much below than that. In fact, today Nifty futures have made a new 52-week low. And if you check, all of the important sectoral indices have closed in red. And the biggest loser in today's day is supposed to be the metal pack. You can clearly see that metal pack is the biggest loser by closing more than 5% down. If you check Nifty and Banknifty, I would say both have closed in red, yes, but Nifty has proportionally not been that negative, which Nifty has been able to do, and that was mainly due to the negative movement by metal pack. FMCG pack continues to outperform by falling less, although auto pack was not so looking strong today. But if you check FMCG, it just closed less than 0.5% down, just more than 0.5% down, I mean. Let's concentrate now on the daily and the hourly charts of Nifty futures. On the left hand side I have the hourly charts, and on the right hand side I have the daily time frame charts. So in the daily time frame charts, what we can see is clearly the trend is down in almost all of the time frames without any doubts. RSI is now just below 30, and if you check the hourly time frame chart, the RSI is very much below 30. It is almost close to 20. So this is a clear sign that Nifty is surely oversold without any doubts. And if you check today's candle, it is very, very large in terms of size in comparison to last few days. If you see, this particular candle is very large. If I plot ATR indicator, I'm pretty sure there could be a spike in the volatility. Yes, here you go. There's a small spike in the volatility here. So this is a clear indication that the volatility is rising slowly and steadily. If you check the 15-minute chart, 15-minute chart also shows a very much clear-cut oversold in RSI. Now, without any doubts, it is very, very clear that the trend is down. The biasness is certainly down, all right? But when all of the three time frames are showing that the oversold RSI is well below 30, because in daily charts it's just below 30, but in the hourly and the 15-minute time frame chart it is below 30. It is close to 20. So if in case if there is a pullback, say an intraday pullback or a very, very short-term pullback, because in hourly time frame charts there is one more thing. If you notice, the moving averages are slightly away from the prices. So either the prices will go sideways, or probably a small pullback will happen, or maybe prices will try to come close to the, the moving averages will try to come close to the price. And in doing so, there is a possibility that we could see some sort of pullback. If the pullback comes, I'm not saying there will be a pullback, but if there is a pullback, then 15,420 to 15,460, this particular small horizontal range could provide short-term resistance to Nifty futures. I'm talking about a very, very short-term, probably intraday or something like that, nothing more than that. And if in fact the Nifty futures continue to go below, well below today's low, then the next level which could be tested could be somewhere around 15,250, somewhere over here. This could be the first level to be tested. And the second level to be tested could be this 161.80% Fibonacci retracement, which is close to 15,090. And since that is a support, we could expect some sort of a resilience by the bulls when prices do hit there. All right. Let's go to the Bank Nifty futures. Bank Nifty futures, again, we can see the trend is completely down, and RSI is just below 30 in the daily time frame charts. In the hourly time frame charts, it is well below 30 and it is almost at 25. Let's have a look at the 15-minute chart. In the 15-minute chart, you can see that we have 3 consecutive lower lows and we have 3 consecutive higher lows in RSI. This is not a positive divergence, but it seems that the momentum in extreme short term is getting slightly weak. So in case if there is a pullback, maybe tomorrow or maybe day after tomorrow, whenever, probably for intraday or little slightly larger time frame, I think if there is a pullback, then 32,900 to 32,850, this 50-point range could provide a decent resistance to the Bank Nifty futures just for short term and ultra short term. I'm speaking. I'm not trying to say for swing traders or something like that. All right. Biasness continues to remain on the downside. And in fact, if the price continues to trend below, I think prices will try to test somewhere around this particular level, which is 32,273. And the next target could be somewhere around over here, this black line, which I've shared over here, which is 32,060 or 32,050. This particular level is going to act as a very, very important support. If this is broken, yeah, I will keep on adding new information, new levels in my next videos. And one stock which I want to talk about is TCS. If you are a consistent follower of my educational videos, then my friends, in the, I think couple of weeks back, in the weekly sectoral analysis video, I believe it was episode number 47 if I'm not wrong. You can just check on my YouTube channel. I had clearly told that this particular stock, TCS, looks to be a very good swing short for short-term traders somewhere around this, especially if it breaks this particular level. So you can see from the level of 33.53 to possibly around 31.33, this particular stock has dropped down, and it has proven to be a very good, decent trade on the downside for swing traders. And considering the current scenario in Nifty and Bank Nifty futures, I believe traders who are holding short positions, because I started sharing my negative view somewhere around 16,427. So from there, it has been a hell of a correction and a very profitable one. So in case if you people are holding any short positions, probably in stocks or probably in index futures, then I would consider that trailing stop losses aggressively is very, very important. Because generally speaking, what happens after a very big, large candle on the downside, generally the difference between the price and the stop losses increases very, very large. All right. And this is supposed to be taken very, very seriously, because in case if you are running out of luck, all right, and if the market decides to bounce back very sharply, it could be possible that a very large percentage of your profit, which is open right now in an open trade profit, which would be taken away by the market. So consider this very, very seriously. All right. And I'll try to share some detailed analysis probably in my next upcoming video, which will be weekly sectoral analysis, especially for mid caps. All right. So wait for that. And if you have any queries, you can post it in the YouTube comment section. I'll try to solve your query. Trade less, trade wisely, stay safe. Thank you.